We are entering a crucial week for American stock markets, as we await the eagerly anticipated speech by Federal Reserve Fed Chairman Powell at the annual Jackson Hole meeting. The event that will dominate the upcoming week's agenda is this speech. However, aside from that, significant turmoil continues in the Chinese market. The extent of its impact on Asian markets and the global economy remains uncertain. We will assess these matters and more in this video, so let's get started. Market review and analysis. As you know, in the past week, we emphasized the situation, particularly the major issues in the Chinese real estate market, such as Evergrande, and how it signifies global concerns. Back in 2021, similar problems arose. American bond yields were lower at that time. However, predictions indicated they would rise toward 4 to 5%. Now, in this context, global interest rates have unfortunately surged due to missed inflationary periods and misguided monetary policies. This has led to a significant polarization of the world's economy. Despite America's attempts to navigate this with a soft landing and a gradual approach, this crisis can't be solved so easily. Since that announcement, the American stock market reached its peak, followed by a decline of nearly $2 trillion in market value. J.P. Morgan also made an announcement a few days later, saying they had removed recession predictions from their assessments. This caused a local peak, and after that, a downward trend emerged. The situation is manipulated in a way that influences the market. They either sell after making such announcements, or the market waits for such news before selling. In any case, looking at the current situation, it's improbable that the world can transition smoothly and softly, especially with America leading the global transition. This is something I'm emphasizing because the mistakes have accumulated over a long period, and the situation has reached a point where the rug can no longer support people walking on it. Particularly allowing inflation to rise and then raising interest rates sharply to control it was a behavior that can't be easily rectified. This series of mistakes, one after another, has caused a two-pole separation in the world. Now, when we look at the present, how to generate profits and protect assets becomes important. In the American stock markets, there has been a rapid rally. A significant rally happened. What happened was that President Powell softened the landing considerably. First, it was a tough negotiation, then a gradual descent, and eventually it became an easy landing. He convinced the market, even mocking the notion of recession a few weeks ago, stating that they had removed it from the agenda. Since that moment, the American stock market reached its peak and has been declining since. Over this period, there's been a loss of nearly $2 trillion in market value. Moving forward, the focus is on the upcoming week, especially regarding the Jackson Hole speech by Powell. He has the last opportunity to either use harsh language that would further disrupt the markets or attempt one last bout of optimism, potentially leading to hyperinflation. However, whatever he says, the situation is already challenging, and it's hard to escape from it. The ship has already started taking in water, and this is evident from the charts. It all began in the past week, especially in videos, starting with Apple's downturn. Everything began to shift with Apple's fall. Following that, the downgrade of America's credit rating and Apple's financial report brought attention to the Chinese developments. If you observe carefully, you'll notice that the market started to deteriorate right around that time. When this happened, President Biden began emphasizing the developments in China. This is because if there's a crisis, they'll emphasize that it's China's fault and America managed its situation well. But the problem isn't solely China's, it's global. Similar problems exist everywhere, even though China has already admitted this and is working on resolving its issues internally. However, the troubles there will continue to have repercussions globally. While troubles are evident worldwide, America might seem strong and capable of presenting itself well. However, the entire banking system is in a distressed state. This is because when they raised interest rates from 0 to 5%, they increased the cost of trillions of dollars of debt abnormally. This led to the collapse of many small and medium-sized banks, although this might take time to surface. Therefore, it's essential to focus on preserving capital rather than seeking immediate gains. Markets might offer temporary opportunities, but considering the global uncertainty, it's crucial to safeguard capital. Now, moving on to specific market segments. Nasdaq. The tracking level is at 15,063. As long as it remains below 15,063, the Nasdaq's trend is downward. Although there was a slight rebound on Friday, it's expected that this rebound will continue at the beginning of the week. If there's no anomaly, This rebound might continue, but remember, once the arrow is released, as I mentioned before, the rallies will still be selling opportunities. We will update this scenario if there are any famous closings above 15,063. S&P 500, our tracking level is at 4,470. As long as it stays below this level, considering the red weekly candles, there were 3 significant, clear red candles there, indicating that the direction is downward. Dow Jones was slightly stronger earlier. Last week, it was trying to hold on, but eventually it succumbed to the same trend as the others. The tracking level is 34,550. It hasn't fully breached that area yet. If it stays below this level, the downward movement might continue. It's been stagnant for a while, either participating in significant increases nor major declines. Energy companies kept it afloat for a while. Now, it's moving in line with the others. Apple initiated the changes. We reached the $198 level but then faced selling pressure. Although the balance sheet remained intact after the announcement, there was a decline the next day, and now it's at $178.50. The trend is to sell on rallies, but closings above $178.50 might trigger discussions about closing the gap. Tesla is weak, especially after reaching its peak of $299. It's down to $215 now. The company experienced significant gains and then fell, rallied to $224 from $101, dropped to $152, and then surged again. But recent weeks have been marked by continuous declines. The trend level is $224. If it stays below this level, it might reach $220, and from there might be a sharp decline to $222 or $224. China's developments are crucial here because Tesla's largest market is China. If the market there slows down, Tesla might struggle to sell products, leading to accelerated declines. Nvidia has its earnings report this week, and the market has priced it quite high, almost in a bubble state. The company is portrayed as the savior with its AI chips that the whole world will adopt. While the earnings report might not be bad, considering the massive sales figures, around $11 billion in a quarter, it's essential to note that the total picture concerns a company valued above $1 trillion, and with PE ratios hovering around 220. They sell a significant portion of their chips back to companies. While Nvidia's sales will continue, it's uncertain whether they can single-handedly rescue the world during a stagnation scenario. The tracking level is $453. If it stays below this level, the downward trend will continue. The recent lows might break, and it could fall to $300 quickly. Amgen had been doing well in the biotech sector, but the healthcare sector performed well last week in the US. The tracking level is $268, and as long as it stays below this, the downward trend continues. The resistance zone of $255 to $256 could provide an opportunity for further upward movement. Coterra is struggling to gain upward momentum. If it closes below $27.40, it might trend down. It's important to watch this closely. Meta, Facebook. After the court ruling, Facebook seemed positive, but since then, many have been selling. The tracking level is $293, and if it stays below this level, the trend is downward. The significant premium attached to its price isn't justified, especially considering the recent, underwhelming metaverse performance. If this aspect comes to light, the downward trend could intensify. Bitcoin, cryptocurrencies, especially Bitcoin, experienced significant volatility last week. The downward pressure continued, and Bitcoin needs to breach $31,000 to move upward. Closings below $29,700 could have a broad impact on the entire crypto market. Watch for further rebounds, however. As long as it's below $25,000, the trend remains downward. Ethereum faced a decline from $1,720 to $1,517 before rebounding to $1,660. It remains in a downward trend as long as it's below $1,720. XRP, Ripple had a positive court ruling, but selling has dominated since then. As long as it's below 52 cents, the trend is downward. This week, there might be some rebounds and respite in the American stock markets. The upcoming Nvidia earnings report on Wednesday will be significant, and I'll share more insights on YouTube. Keep an eye on the markets and stay cautious. Wishing you careful trading and prosperous days ahead.